Hey everyone, it's me, Madi again. I'm back with a third training video for you. Alright, so what do I have for each of you on my trading agenda for today? Let me go ahead and see. But before I move on, if you haven't subscribed, please do so. Subscribe button somewhere on your screen. And if you are, welcome back. Alright, so for today's agenda, requested by Joe Coleman. What up, Joe? Support and resistance, a little bit more on that. How to use the VIX. VIX is the Volatility Index. I'll go into that later. When to get in, when to get out, and then how to use volume and MACD to support your entry and exit points. So let's start with support and resistance. And as usual, what we'll do is we'll look up the value through Google. And then I'll give a better explanation. So in trading, support refers to the price level on a chart where a downtrend is expected to pause or reverse due to concentration of buying interest. It acts as the floor that prevents the price from falling any further. Essentially, when a stock price approaches the support levels, buyers are likely to step in, increasing demand and pushing the price back up. I have my Fidelity open here, and I'm going to teach you how to find these support levels. Let's remove the EMAs and the MAs so you can find these support levels easier. And let's see if there's like a drawing tool. There is. And I'm just going to do a line at these support levels. Alright, support level. Right here, the 77.91 is already indicated. So, oops. So that would be your support level. I saw somebody draw a line by just clicking, but apparently it doesn't work for me. So let's go ahead and draw that line. This would be your support level right here. Right? There. Again, another support level, if you were to look back, I would say this would be a support level. You see how it repeated itself right here and right here? So let's go ahead and draw a support level here. I'll adjust the line. So right here and right here, you see, same exact level. So that's definitely a support right here, this one right here, and right there. See? Alright, let's find another support. If you're saying this right here, this is a support level because this is where it stopped, and then it found buying pressure and it started moving up. So support level right here. Right there, beautiful. And then 77.72 is a support level. This is a small support level too, and it's repeated. Right here, it kind of slowed down, and then support was found there. So that's your support, basically where it stops dropping down. These right here are higher highs. See, like it looks like a little mountain. Then it went down, went up, reversed down, and there's another higher high. Then you keep going, higher high. When you see higher highs, especially pushing past a resistance, you are more than likely guaranteed a push up in the upwards direction. Why? Because it's making higher highs. While I was chatting with Joe this afternoon, I sent him a screenshot of one of my I think I was already in a stock, and I told him, I know this stock is going to continue going up because look at the higher highs that are being made, and it hadn't broken past the resistance. But the minute that it did, it pushed up. Similar to this, it started trading sideways here in this chart. It started trading sideways and then it pushed up again. But those higher highs normally mean upwards trend. All right, so we know what support is. We know how to find it now. Basically, the lowest it's gone. Even though here it went up and it turned sideways, and this right here is still a support. this is a support because it stopped from here. If you want to consider this somewhat of a support, you can as well, because you see support here, support here, support here. It didn't allow the price volume to drop, so that's why it's a support. Now if we want to talk about what resistance is, let's go ahead and go back to Google. But basically the resistance is the opposite. It's where it doesn't let the cost go past. It's like a ceiling. In trading, resistance refers to a price level on a chart where a security has historically encountered selling pressure, meaning that once it hits that number, it sells off, causing the price to reverse or stall in an upwards movement. It's essentially a price ceiling, told you, that has been difficult to break through. So how do we find that? Again, if we go back to the chart, many of the times it's highlighted for us. So right here, 78.51. Right here would be another one. You see that? Right here. Let's see. About the same right here. You see this one right here, this one's a big one. And if you see, it lines up with right here. Sort of lines up there. So once it passes this resistance, you see the upward trend. You see? There's the resistance. It's getting, normally what happens is that a stock will start moving upwards, and then you're close to resistance, so it sells off, and then it tries to push past. She does this every video. Zoe, go! Every video she wants to make her presence known. Ven pa acá. Ven. Yeah. She's bilingual. Go. So here's the resistance, and then once it breaks that resistance, you see it push through, and there it goes there. Here's the resistance, a different resistance. This is your obviously highest resistance for the day. Let's see. Let's zoom out and see if it's actually the highest resistance for the day. All right. Yeah, it was your highest resistance of the day. You can tell this is pre-market here.
Detected at your boat.
Then this right here is regular market. And then this is post-market or after-market. You see the day, the sun, that's the difference. And that was your highest of the day. So many times what happens is, based off of how the market's going, this can be your support next time. So I know that we connected last video and I spoke about how your resistance can become your support. So if we trade tomorrow and the market continues to move in an upwards trend and it breaks past this 78.51, let's say it goes to 79 and it sells off at 79, it will look for support at the 78.51 mark, because that was once your resistance. So we spoke about support, we spoke about resistance and what they are and how we use them. Sometimes we can use them to find our entry points, so when to get in, when to get out, right? So right here, this was the opening of the market, 9 a.m. Market automatically pushed up and started finding resistance here, right? Sold off, sold off, sold off, found support here. Started moving upwards, and then it hit the same resistant line and sold off. When do you get in? I wait for 2 candle confirmation after the resistance has been broken. So right here's the resistance is sold off. this is the line of the resistance, right? This green candle right here broke it. One candle, two candle, it sold off. This green candle, this next green candle, I would have gotten in right here and then just rode this up until I start seeing a true turnaround. And by true turnaround, I mean, let me put my EMAs and my indicators in so you can see. There, EMA, MA. I would have probably gotten out right around here. No, I wouldn't have. I would have waited because I was still up. I would get out maybe, since this is such an uptrend and there's no true like downtrend. I took this play today and I got out at 70. I got out $77.70, and it was because I had to go run errands, so I didn't want to hold on to a stock and then run errands at the same time. But normally what happens is, if you get in over here, you can set your stop loss at least 2-3% under, so like around here, and then you can let it ride, right? Once you see it start turning, you can make the decision to get out when you see let's say 2 to 3% drop from right here, like this uptrend. So you saw how it was an uptrend and then it started selling off, say 1 or 2%, and then you decide, all right here I think it's enough, and then sell out. Or you can wait because you're already up. You see, you're already up from here to here. It just depends on if you're willing to hold on a little longer to see if the stock goes up, or if you are okay with what you have and you're like, all right, I'm out. This was an uptrend momentum, so it's hard to really explain when to get out. Normally when I get out of a stock, I look at the candles and the sizes right here. You see, I will get out of a stock when it starts to break out of the VWAP, or when you start to see that the rejection is occurring. Over on the other side, there was not much of a rejection. Today was just a straight upwards trend. But once you see the rejection like really start occurring, look right here. Let's zoom in. You see how it's going up, and now all of these candles are below the EMAs. You start to see them go below, and it keeps getting closer and closer to the VWAP. See how over here it's so separated from the VWAP? It's going up and up and up, and now you see the candles going down, down, and on this side in the inside of the indicators, right? So you see how it's in the outside and it just keeps going, and now you see it going sideways. This is telling you, literally in your face, it's telling you it's about to sell off. It's going sideways and it's getting closer to the VWAP and closer to the VWAP and closer to the VWAP. It's like it's walking closer and closer to the edge, and then once it gets to the edge, boom. So that, to me, those are my indications out. Why? Because you're no longer in the outside, you start getting into the inside, and then you're also getting closer to the VWAP, closer. And we know that once these indicators are below the VWAP, it's what? A sell-off, right? And the same thing, like you can see here, it starts to go in the outside and it gets closer to the VWAP and closer to the VWAP. So now it's going towards the VWAP, and this is showing me it's an upwards trend. So keep your eye on that VWAP. How close are we to it? How far are we? If you see that you're over here and you're getting closer to it, look at your MACD, look at your RSI, see if that RSI is turning, or if it's too open. Let's say this is the RSI. I thought it was a MACD. You see the MACD, it's very telling. I was telling him, look at the MACD, look at that MACD, see how wide the gap between the gray and the yellow are, and see when it turns. And when it does turn, see if it reverses almost immediately. See right here how big this MACD is, like how wide? That's this sell-off. And look how wide it is. As it continues to sell off, it gets wider and wider, and then when it starts to turn, you see the closing and the crossover. So that's how I know when to get in and when to get out. Now, I said that I was gonna talk about the VIX a bit. Let's see if Google has an explanation of what the VIX is. But VIX is a volatility index. Oh, it just takes you to the VIX. It's a ticker symbol, popular name. All right. So how traders use the VIX right here is a guide as to if to trade or not. All right. And let's see. It's been a crazy volatile week, right? But when you log in the morning, there's a code. Like, let's say it's an inside code, a trader's code, right? And the VIX explains to you if you should take that trade or not. And that is if it's less than 15. So if the VIX is less than 15, you log in at 1733. So it's not less than 15. But let's say it says 14. Oh, my ice cream's melting. I should probably not be eating this. I haven't gone to the gym in like almost 2 months, but whatever. We're there. So if it's less than 15, the market's calm and there's clean trends. If it's 15 through 18, normal market's trends, so it's normal. 17.33, it's normal. If it's 19 through 25, it's pretty choppy market. If it's 25 plus, so if that cost amount is 25 or plus, like over here, I think I saw it, then it's just big swings, like big swings everywhere. Meaning like 1 minute you can be high, the TQQ could be high, and then the next second you're at a red. And then 35 or plus, it's just like fuck it, don't even bother. Just close your laptop, go to the beach, go hiking, just do something else, come back tomorrow. So that's how you can use the VIX to determine if you're gonna trade or not. So what else? Then when to get out, when to use the VIX, and how to look at volume. Normally the volume is gonna tell you a lot about how many folks are actually trading and if it's worth, where's the volume? There it goes. Getting in just yet. I should have been on the screen. All right, so let's go back to TQQQ. So when you are about to enter a trade, let's say it's early morning, many times the market is just so volatile that you're probably wondering, all right, it just spiked up, should I join this trade? Right? So one good indicator to look at is when you're gonna get in and you're like, all right, this is my entry point right here. If there's a small sell-off, look at the first green candle to the left and see if your red candle is smaller than the upcoming green candle. So for example, you see right here, green candle, small blue red candle, and then boom, a bigger green candle. That means that it's a good indicator that there's volume. So right here, green, red, big green candle. So you have more people looking to buy. See how those candles are big? This one right here, there's more people looking to buy. Again, today was just, I don't even know what happened today. It was just a straight upward trend. But if you go back into the previous days, you'll see like in the good entry points how the volume, all green, small reds, and then bigger greens. So look at the volume to see how much pressure there is on buying, like how much buying pressure there is. So this is a bit about today's training. I wanted to make it short because I am going on a trip. Is it the day after tomorrow? So I will be trading from Europe. I'm gonna start doing some live trading sessions. I think I can do like screen records, like I did with Joe, and share a bit about when I got in and when I got out, and how I watched the MACD turn. But I still have a couple of other things that I want to share in regards to training before I get into live trading. So for today, that's all for me. Have a good afternoon.